Hi, very good evening and welcome to Markets today on CNBC TV 18. I'm Mkts and with me is Surbi. Surbi, it turned out to be quite a choppy session today. At least in the last 30 minutes is where all the fireworks took place, and 85.25 is where we ended.
It was quite a disappointment, I guess, Ekta, for the Bulls, because we were looking so solid and steady in the first half and everything tumbled. And I have a feeling some of that had to do with some of the disappointing news we've heard from New Delhi. The fact that this indeed looks like a complete washout monsoon session. So we're going to talk about that and a lot more, but first let's start with the headlines. A sharp sell-off in the last half an hour wipes out all gains on Dalal Street, with benchmark indices closing 0.4% lower. The Nifty falls nearly 100 points from the day's high to close just above 8,500. Metal, auto and oil and gas stocks lead the decline.
Midcaps fare better, with the index ending down just 0.1%. Chennai Petro, for example, rallies 15% after gross refining margins spike up to over $10 a barrel. Wockhardt and Divi's Labs gain on steady earnings. Z Media, JP Associates, MRPL fall between 6 to 11% on disappointing numbers.
Reasons for the market fall perhaps might lie in New Delhi. Congress and BJP failed to strike consensus on the land bill report, pushing its submission to the winter session of Parliament. Finance Minister Arun Jaitley accuses the Congress of stalling economic progress by deliberately blocking the GST.
Well, those were the headlines. Let's also tell you the experts that we have lined up on the show for you this evening. As a part of our special series Inside Chennai, we will get you some perspective from S. Nareen of ICICI Prudential AMC and Anand Radhakrishnan of Franklin Templeton Investments. On our corporate radar this evening, we have Shikha Sharma, MD and CEO of Axis Bank, with her outlook for the banking sector, and we'll also get you the managements of some companies that declared their numbers today.
All right, first let's tell you what transpired. It was around 3 p.m. Bulls were in control and markets were looking quite steady. But then Bears launched a late onslaught, and quite a scathing one at that, catching almost everybody off guard. The Nifty was cruising above 8,600 at one point, but then that index ended the day closer to 8,500, losing almost 100 points in just 30 minutes. The Sensex also lost over 100 points thanks to that last hour sell-off. Midcaps hit record high in trade, but then ended with marginal losses, though that is relative outperformance compared to the blue chip indices. Anuj is now here with the day's highlights. Anuj, what triggered this big slide today?
A bad close for the market after a really good day. Till 3 p.m. it looked like the market was running fine and that the bulls finally had the ammunition to take out that 8600 to 8650 band. But yet again at 3 p.m. the market fell, and quite a bit actually. It fell about 100 points on the Nifty, 300 points on the Sensex from the high point of the day in a matter of 10 or 20 minutes. So it looked a bit ugly at that point. And what was interesting was that it was indiscriminate. Every single stock from the index was selling off between 3 to 330, which was quite interesting. Even the mid-caps gave up quite a bit of gains in late trade. What triggered that? You could blame it maybe on program trade, maybe a bit of basket order, but clearly it looked like then the market is not ready to take out that 8650 mark just yet. Let's talk about some of the stocks that led the market down actually. The biggest drag came from these three stocks. Reliance, which was down 1.5%, ITC was down 1%, and Infosys about 1.25%. Then we had some other losers like ONGC that was down about close to 3%. Tata Motors was down almost 2% as well, and Coal India was down about 1.5%. Some other nifty losers included stocks like Idea, NTPC, and Mahindra as well. All these stocks down about 2%. On the gaining side, the surprise gainer again was BHEL. Bad numbers, but a lot of buying activity from institutions is helping this stock. So up about 2% today. Hero MotoCorp up 1.5%, and Maruti was up about 1%. In the mid-cap side then, stock of the day today was Chennai Petro. Big surge in that stock after the numbers. Stock was up 15%. Subex was up about 16%, and GHCL was up about 12%. On the losing side though, there were some names as well in trade today. Stocks like MRPL, that was down 11% reacting to numbers. Tata Tele Maharashtra was down about 8%, and JP Associates has now become a penny stock, but that was down about 7.5%. So the key takeaway is that yes, the market, yes, the bulls are still in control, but it will require some effort to take out this 8600 to 8650 band.
Okay, thanks Anush for that. Absolutely a reversal in the advance decline ratio is what we saw as well. It was on the advancing side at around 2:1, but we managed to close absolutely the opposite in terms of the ratio. Staying with market action then, S. Naren, CIO at ICICI Prudential AMC, says he is waiting for a cyclical recovery and there is further headroom for a rally in financial stocks.
What we are waiting is for a cyclical recovery. Then you have an entire set of stocks which look really cheap. Because think about it, today you have very low growth in cement, you have very low growth in power demand. I mean, you have very poor margins in sectors like metals. So you know that upstream oil companies have very low margins today. So I think there's a whole set of sectors whose margins can go up significantly from where we are if you take a 3-year period. Clearly, there is huge scope for financial assets to go up. And I believe mutual funds with the kind of regulatory framework and ease of investing, I guess there is huge scope for all of us. There are a number of mid-caps which trade at 40-50 times trailing. You know, you can look at the cheaper ones there, but the cheaper ones there do have constraints on, I would say, near-term outlook. If you look at their valuation on trailing PE, you'll find that they are not cheap at all. On the other hand, you know, you have a lot of these small-cap pharma and mid-cap pharma, which all have some attractive product opportunities, which gives you a lot of opportunities for growth.
Okay, that's some opinion on the market. But now let's tell you what happened in New Delhi. The monsoon session of Parliament has hit the home stretch, but there's no sign of truce between the government and the opposition, which translates into a major setback for the land acquisition bill. The parliamentary panel's report will only be tabled in the next session of Parliament now. The Congress is demanding a vote on some clauses of the bill at the Select Committee, and this is despite the government accepting to bring back consent and social impact assessment into the bill. Hear out what both the Finance Minister and then Mr. Rahul Gandhi had to say as politicking continued over two crucial legislations.
Today it is clear that when most political parties want a discussion to be held, the Congress party has taken a maximalist position that it will not allow proceedings to be held under any circumstances. On behalf of the government, we are constrained now to observe that the issue of Sushma ji is merely a pretext. The real motive of the Congress party leadership is that they don't want the constitution amendment on the GST to be passed in this session of the House.
It was very nice to hear Sushma Swaraj ji the other day in Parliament giving a very nice speech about how we should be very kind to Mr. Modi and we should be charitable to Mr. Modi. You want to be kind, you want to be charitable, why do it in secret? Why hide? Why not tell why not tell your whole ministry? Why not tell the whole country you're doing it?
Okay, that's all on the political front. But now to earnings. Adani Power and Adani Ports reported numbers today which were largely in line with street estimates. Here's what the managements had to say about the performance this quarter.
Overall, we had a robust quarter of improved performance from Mundra, Tiroda and Kawai. With additional contribution from UPCL and the recent impetus given by the government for increased domestic coal output, the company's financial performance will further improve in the ensuing quarters.
APSEZ handled 40 million tons of cargo, which is a 17% growth compared to the corresponding quarter of last year. In the case of containers, we handled 748,000 TEUs, which is a 10% growth compared to the 680,000 TEUs that we had done last year during Q1. This is 3 times the growth of the industry, because on an average the industry grew at 3%.
All right, more earnings then, and the stock of the day really was Chennai Petro, which surged almost 14 to 15% after numbers came out, as it reported what seemed to be a very strong set of numbers. Varinder Bansal, who's been doing all the number crunching, is now joining in. Varinder, what's what for this company?
So thank you so much. Clearly, the stock of the day, the earning of the day goes to Chennai Petroleum. The stock was up by nearly 15%, and look at the numbers reported by the company. A net profit of 923 crores compared to 364 crores sequentially. Antique was estimating a net profit of only 300 crores, so nearly 3 times beat in terms of what analysts were expecting on the street. Total income was up 2.5%, and EBITDA numbers are very important for this company. Reported an EBITDA of 1,061 crores compared to an estimate of only 670 crores by Antique, and EBITDA margin was 11.7% compared to only 5.5% on a sequential basis. This clearly came on back of GRMs. Haven't seen this kind of GRMs by any company, till now. 10.09 dollars per barrel over the GRMs reported by the company, and that says all. The throughput was improving. The GRMs are at lifetime high for this company, and IFC is pumping in nearly 1,000 crores to strengthen the balance sheet of the company. So all-round performance, great performance done by the company, in terms of numbers. Also look at it, the market cap of only 3,000 crores and company reporting a quarterly profit of 900 crores. Does this mean that there will be some upgrades coming in tomorrow morning? Let's wait what happens to those reports which may come from some of the brokerages. But clearly, superb numbers reported by the company. Stock was up 15%.
With the continued low prices of crude oil, it's also expected that refineries like CPCL would continue to do well, and we do expect that some of these performance parameters would be sustained. Of course, we had, as I mentioned, a significant increase in inventories. The gain has been quite considerable during the period, which has also contributed to the higher GRMs. While these numbers could vary, but otherwise continued sustenance of performance in terms of operational areas has certainly helped the refinery to improve its performance.
Okay, stock up 15% there. But on to our CNBC TV 18 exclusive. Transmission of rate cuts to the banking system will take some time. That's the word coming in from Shikha Sharma, MD and CEO of Axis Bank. CNBC TV 18 Shireen Ban caught up with her. Sharma believes that there is headroom for an RBI rate cut.
If conditions remain benign the way they are right now, we're not seeing growth pick up too much. It is moving in the right direction, but it's still kind of anemic. Inflation seems like it's trended in the right direction. The monsoons haven't been too bad, so hopefully that doesn't put much pressure on food inflation. Once the US Fed action is done with, I think that gets discounted as well. I think you will have an environment where there may be headroom for a rate cut.
Do you see more of your accounts going to the 5x25 route or the ARC route, for instance, which is something that other banks are taking at this point in time?
As far as sale to ARCs is concerned, we would resort to that if we felt that we were not the best resolver of this asset. And actually the ARC would be able to do it better by bringing together a pool of assets. And that's the situation under which we have worked with the ARCs in making it happen. Our preference is to do cash sales so that, if we're selling it to the ARC, they pay us the cash and we kind of move on. And otherwise, we are happy to work internally in terms of working with promoters in resolving some of these assets.
Okay, that's the review from Axis Bank. Moving on, even as the battle against bad loans continues, Anand Radhakrishnan, CIO Equity at Franklin Templeton Investment, believes that he continues to remain quite structurally overweight on that space.
We have been structurally positive on the private sector bank for quite some time. If you look at the last 10 years, our portfolios, so one of the common things you would have seen is our structural overweight stance on the private sector banks. The reason is fairly easy to elucidate. They come from a very small market share. They are best in practices in terms of some of the banking sector practices. They've also managed to control the risks and grow their banks profitably. Till about 3 months back, we saw significant inflows in the mid and small cap segment of the market, and so the funds which are focusing on that space were getting copious and large inflows. And contrary, on the other side, we didn't have that much inflows into our large cap funds. What we are telling investors is that now that there has been a lot of mean reversion trade that has played out in the valuations of the mid cap and small cap, and the discounts have generally gone down, we recommend investors to allocate a lot of the money towards the core segment, which is the diversified equity funds.
All right, time for a break now. But coming up, Sudarshan Sakani joins in for a technical chat, and we'll also tell you about the other stocks that were in focus today.